Hey guys, welcome back to another Trade Genius podcast. Philip here with Bob, and we got a good one for you because we just talked about how the Bitcoin miners are collapsing. Well, guess what runs the Bitcoin network? Bitcoin miners. And so if they're all going down and they don't make it and they don't economically survive, how is Bitcoin going to run? Is that network even going to work? You're going to want to watch this video to find out.
Trade Genius.
Okay, so Bob, you and I have talked about this way back in the beginning. You had talked about some of your concerns with Bitcoin, and I think a lot of people aren't totally clear on this as what happens, because these miners that's a legitimate issue. These miners may or may not make it through the next 12 months. We just don't know, right? Like we said in the last video. And so the concern is like, does Bitcoin survive? If everybody turns off miners, the network doesn't really run very well, and we're sitting around and transactions can't clear. And I just think we got to clear this up and just have a healthy debate on what's going on here.
Yeah, in fact, the reason why we're doing this video is when I was talking about the miners collapsing, I just said to Phil, and Phil laughed because he and I have been going back and forth on this, I guess, 8 years now on from Bitcoin as a fraud to can the government shut it down to now we're on the miners. And I said, hey, if Mara and these miners go out, is the Bitcoin network going to collapse? And I think I like some of your answers there. And what I want to do is maybe throw up those questions at you, Phil, and if you can just kind of knock them down, because you satisfied my concerns, and and I'm normally pretty pretty suspicious on all this stuff, and it actually made me feel even more confident about Bitcoin after that. So first of all, Phil, what is the Bitcoin network?
Well, we'll go to this slide here. So essentially, we have a bunch of nodes that run. Some nodes are just light nodes, they're just, you're doing transactions. Some nodes are full nodes. That means they hold the entire history of the Bitcoin blockchain. All the data that from block number one, that's a full node. Miners, they're the integral part of this because they're the nodes that really confirm the transactions on the network and approve the chain that the chain's valid. And they're always ensure that the proper chain is valid. And without getting super technical, they're all broadcasting when they solve the blockchain problem, which confirms the transactions on the network, they broadcast it out. And everyone else says, yep, that checks out, onto the next block. Okay, so you have this here in this map. You can see all of the nodes all over the world, highly concentrated in the US and highly concentrated in Europe, which coincidentally is the economic centers of the world, right? But you can see that this is a network that relays all these transactions all throughout these nodes, all throughout the world, similar to how the internet's routed. So that's in essence, without getting super technical, that is, you're looking at what represents all the nodes on the Bitcoin network that pass along all the information that the miners confirm. Easiest way to explain it.
Yeah. So we're talking about Mara. Let's just make an assumption. Let's say Mara goes bust and nobody picks up their equipment and tries to run their stuff. So are the miners like a closed club? Like, are those the only guys that are allowed to mine, or how does that work, Phil? So let's say, the miners start going down one by one. So how does the system breathe and live in that environment?
Yeah, so what happens is if, let's just say no one picks up the pieces off these industrial miners and they start eating it, you go back, enough of that happens and you will go back to a time where you could mine in your house because it didn't really cost that much and it was actually a little cheaper to mine Bitcoin than it was to outright buy it. And that's really what it comes down to. Is it cheaper to buy Bitcoin or is it cheaper to mine it? And it's only cheaper to mine it if you do it in scale these days. But back in the day, going back to 2012, 2013, as latest about 2014, when the Chinese ASIC miners started to come out, that's when it didn't really become feasible too much anymore to do it at home. The electrical costs were such that you were just better off buying it. And so you had to go to a more industrial approach with wholesale electrical costs and things like that and do it at scale. Because even now at scale, and it's a really wide range, but it's somewhere between $8,000 to $12,000 to mine Bitcoin. Some places might be able to do it for as low as $4,000 to $6,000. So it's hard to pinpoint exactly what the costs are, but the point I'm trying to make is that at some point, if enough of this, enough miners go offline, it will incentivize somebody somewhere to start mining again. I mean, you would start mining again, Bob, if you could mine Bitcoin cheaper than you could buy it, and it heats the house in the wintertime, right? So there's incentives, and we're not, and the guys that are doing the, I think Exxon or one of the energy companies was going to take the off gassing right from the energy flares, right? The flared gas, they're using that, turning it into energy to mine Bitcoin. So they're recapturing that wasted energy. So you're always going to have that now because there's a way to take energy waste and run it through Bitcoin. So I think, yes, they could blow up. And yes, a lot of the hash power on the network could go down. But the funny thing about the network, and that's this next slide, is that you have difficulty. And a lot of people still don't understand what this means. And I'm going to explain it as simply as I can. The Bitcoin network likes the inflation rate of 1 block every 10 minutes. And that means that every block, these miners get their reward. Okay, that's how come we produce 900 Bitcoin per day, because you're pacing it at 10 minutes. Now, if the Bitcoin network drops off, like there's a bunch of hash power that just falls off the map, you're going to see this difficulty drop. Now, you can see over time it goes up. Why? Because people are economically incentivized to throw more rigs online and mine Bitcoin because it's profitable when Bitcoin's at a certain price point. But there's a self-healing nature here, because if Bitcoin's price drops to a point where it's no longer profitable to mine, people start unplugging older machines that aren't efficient. That drops this difficulty. That means the newer machines are more profitable to mine. And if it keeps happening at some point, let's just say it just keeps happening for a long time, at some point people can start mining at home for cheaper than it is to buy it. So you have this like never-ending incentive to mine Bitcoin. So to answer your question, the way the network is designed and incentivized, there's always going to be like a miner of last resort. At some point, the price point's going to be to a level that's going to incentivize to plug a machine back in. And where you want to be smart is you don't want to be leveraged on the high end, right? And that's where these miners get in trouble, because they throw all this capacity when Bitcoin's at 50,000, 60,000, and they're basing their revenue off of that. Well, when it drops 70% and now they got all this capital expenditure out there that can't pay for itself, they capitulate and they have to unplug it or sell off. Meanwhile, if you're sitting there with an older machine that's getting dusty, all of a sudden it's profitable. Boom! It's like buying the dip in a stock market, right? It's the same principle. So whereas you have like in our world, the central banks are the buyers of last resort. The mechanism of Bitcoin's economic incentivization through the fact that at some point it becomes profitable to mine is the last resort for keeping the network up. There's always going to be a miner of last resort because it's an economic incentive to do so. That's why the network it would be really hard to kill the network. We're talking like asteroids to really finish it off.
Yeah, and then we'd have a different problem then. But so really what you're saying then is that the network is really self-healing. I don't need permission. Tomorrow I could throw a rig up, plug in, get the software, try to mine or do transactions, and to the extent I'm successful, I'm in the network, right? So
right.
There's no like club, like no. You have to be a central bank governor kind of a thing. So the system is really, it's self-healing, self-replicating. And the thing I was just thinking about when you're talking about these miners going bust is like the airline industry. Remember, you'd have all these cheap jets, and then you'd have these new startups show up, and so I guess the same thing could happen with the miners.
Correct, absolutely right.
So, yeah, it was interesting. I wanted to talk about that too, because it was really, I'm thinking like, oh my gosh, are they trying to blow up the network? And then Uncle Phil had to come and walk me off the ledge and tell me no, they can't do that. And so. And that's really interesting, because that's really how you got started. You were rigging in your own home, correct?
Yeah, way back in the day. I was fortunate enough to discover Bitcoin way back in the early beginning. But it's interesting because then you can start putting your tinfoil hat on. And one thing that's always been kind of funny is this is one phenomenon that Wall Street was really late to the party on. They missed the boat because you got to realize most of the Bitcoin's already been mined. Goldman Sachs can't be in there getting controlling shares of Bitcoin. That's not possible. I mean, that was already a factor. The majority was mined even before the Chinese ASICs came online. So like the Chinese couldn't, like nobody could really get a controlling share of the holdings of Bitcoin. But it's interesting how this is all playing out, because by virtue of maybe these firms not making it, guess who can come swoop in and get the infrastructure? Big banks. So you could almost theorize that they were helping inflate this bubble, because they knew, these guys couldn't resist, and they'd lever up and they'd be there when it all collapsed, and they knew the Fed would pull the plug sooner or later, and all this would come crashing down. And they're not savvy. These guys aren't savvy enough to hedge properly. They're just seeing dollar signs. Whereas the big legacy banks, old banks, they've been through this a number of times, and they know. So they probably just dangled the carrot out there and realized that, hey, these guys get levered up, and let's give them the leverage. Give it to them. They can come back in and pick up all the pieces, and then they won't miss the boat, because they've basically got a second opportunity to get in. And the side effect of that is that you at home can get in by, getting that whole Bitcoin, because, it was $40,000, $50,000, $60,000. That's really hard for people to get one whole Bitcoin. But at these levels, a lot of households can accumulate one. And that's like, I consider that your household Bitcoin. Put that thing away, and, don't touch it, and let this thing grow, and let these big banks run this thing up. And let the rest of the world adopt it. And you're going to, it's be like if you could invest in the internet back before 2000 and dial-up was still a thing, kind of, heading toward broadband. But if you could have literally invested in that, your investment would have grown exponentially. So, but you couldn't. But this you can. So that's probably the best way to look at it as far as an investment goes. So even though they may be getting a second chance, you're also getting a second chance as a side effect. And I think you should take advantage of it, because I think the upside potential here is far outweighs the downside.
Yeah, and look, and I come at it from a stock standpoint too. There are so many more tools now to help you kind of collar your investment and monetize your investment, and to hedge your investment while you wait for, really, what we're really all waiting for is for fiat's inevitable demise. And so you want to have something, and if you put it in a category, look, people that have oceanfront property, okay, that's a rare commodity. And that's really when you're buying an asset, you want to either own something with a moat, something that could spit cash, or something that's rare. And so, these are the things, and Bitcoin fits that mold. So that's why I like it. Same thing. I live in an area with oceanfront property, so, you want to be where you think your value is going to maintain. Yeah, so when we go through this stuff too, as we talk, we'll help you guys understand, what's the role of BITI in this? What's the role of a miner? Can you hedge the miner? And funny, we're talking, since we started really getting on this whole thing started with the stupid Sam Friedman dude.
Right.
That's why we've been really pounding on the crypto thing, because, man, billions of questions are coming at us. Did they finally kill it? Is that we learn so much more now, how behind the scenes, big money is really now setting themselves up to do this. And look, Fidelity doesn't get in this game if they think this is a year or two, project. These people are way too conservative for that. And so I think this is a great opportunity, because we know the fiat regime can't last. And we're going to be talking about that over the next couple of weeks in terms of some of the games that Janet Yellen's playing. Some of the games that they're playing with employment report. Don't miss that one. We're going to do that one next. And just some of the games they're trying to do. Look, the reason why Federal Reserve is being as hawkish as they are, because they know as soon as they relent, the dollar goes, and the dollar is a reserve currency, and it's the last man standing. And the last thing these people want is to have Bitcoin and gold and other rare commodities become the trading commodities of choice versus the dollar. So you got to get positioned, because when this thing happens, it's going to be like when Roosevelt did the executive order. We're going to wake up one day and we're going to be like, why is Bitcoin at 100,000? Why is gold at 20,000?
Right.
And people are going to sit there and go, well, I got time for it. Well, you have to drill, baby, drill. You got to, if you don't want one whole Bitcoin, get something. Be in the game. Just like when the lottery ticket gets to $500 million and the whole office is buying a ticket, you better buy one too, because you may wake up one day and you might be the only one in the office. So,
yeah,
that's the way you have to think about this stuff. But so thanks, Phil. I really appreciate it. You put your money where your mouth is with Bitcoin. You've rode the waves. You're holding firm, and these are the kind of guys like Phil you need to listen to in this stuff because he's not like Sam Friedman and the crypto guys. He said something very telling. He said, why did people do more due diligence with you? They asked him that question when he did that roundtable with the New York Times, and he said everybody was only looking for the upside, and they got greedy. We want you to be smart.
Yeah.
So Phil, thank you for teeing this up for us.
Yeah, no problem. It's a good debate, and I think hopefully that clears things up for the listeners. And because sometimes you don't understand something, you fail to invest in it, and there was no reason for you not to invest in it. And of course, anything can happen, right? We don't know the future. All we can do is judge the pros and the cons and the risk and the reward. That's all we do as traders and investors. And this checks the boxes for risk reward. So hopefully that helps. And we'll see because I think ultimately, and I think Bob, you agree, the printing press is never going to stop. And unless you have something that's going to hedge really well against inflation, hard assets, Bitcoin's the most finite that's accepted as a store of value, and you have big banks and everybody jumping into it, follow the money, right? So yeah, hopefully you guys can take advantage of it, and we'll be here along the way to help you guys make those decisions and tell you when times are good to do that and when it might be getting a little overheated and you might want to be careful to the downside. So hopefully that helps.
It does. Thank you.
All right, guys, thanks for watching. We'll catch you on the next episode. Take care. Bye-bye.
Trade Genius.